Hi, good afternoon, everybody. My name is Rajesh Sharma. I'm the president and CEO of Fancamp Exploration Limited. It's a Canadian mineral exploration company which is interested in having strategic interests in high potential and high quality mineral projects. We have investments and we have mineral projects all across Canada.
Brilliant. Lovely to meet you. We've not met or spoken before. So maybe let's start off with, who are you? What have you done in the past relative to what you're trying to do now?
Thanks, Matthew. As I said, I'm Rajesh Sharma. Most of my career I spent in a large corporate called Tata Group, looking at investments and acquisitions in mining space. And I've lived and worked in Africa, in Europe, in India, and now in Canada. I've been involved in building mines, in acquiring mineral properties, developing mineral projects. So a whole host of experience, and have been involved with Fancamp for the past 3 to 4 years when the board decided to bring in new management, and have been trying to shepherd the ship since then.
Okay, so tell me what I'm investing into here. Obviously sitting at around whatever, 17, 18 million market cap. Your marketing material talks about, cash and marketable securities. You've got royalties, various financial instruments, and of course, advancing exploration plays. So how do you describe yourself?
Yeah, so Fancamp, as I mentioned, it's a junior mineral exploration company with only $17 million of market cap. But it's got tremendous upside in the sense that it has got its cash and marketable securities are more than at 20 million level as we speak today. So that's one thing. In addition to that, we have got certain very interesting financial instruments in key geographies, which will bring great value to the shareholders. And we have also a portfolio of royalties and also future finite production payments, which will again deliver a lot of value to the shareholders. So in all, a company which has got a very strong balance sheet, very strong and involved board. 24% of the shares are held by board and management, and also very strong fundamental assets. In addition to that, we have a very good technical team, which continuously looking at new opportunities, developing exploration projects. So that's the other strength of Fancamp.
Okay, so you're mentioning exploration projects, but it kind of sounds prospect generator type model to me as well. So why are you sitting on marketable securities, and in what?
Yeah, so I think the primary one is the 2.7 million shares in an iron ore producer called Champion Iron. And they would be valued somewhere between 15 to 17 million, depending on the day you look at it. And this was a part of the deal which was done way back. And in exchange of the mineral properties, shares of Champion Iron were obtained by Fancamp. We also have a kind of a royalty or finite future production payment from some of the mineral properties which we traded with Champion. The aggregate value is really $40 million. Similarly, we have done some other deals where we are very creative in trying to structure our involvement and engagement in projects where we have taken a stake, done a joint venture, or done an optioning out agreement, various forms and structures, which led us to be at the point where we are in right now.
Okay. So they have the varying degrees of value depending on what's happening with the share price and market, but I guess you could monetize the royalty component if you wanted to. Okay, interesting setup and structure. So there was a period where you felt you needed to kind of offload those, or you felt it was the right thing to do? Obviously, Champion Iron specifically, I'm going to focus in on because that seems to be the bulk of the value. Is that right?
So that's bulk of the value in terms of marketable securities.
Yeah.
So we definitely believe in Champion Iron. So we are holding on to the stock, and we expect that it'll go up. I would not like to speculate, but I have been involved in iron ore business, building iron ore mines, so I understand the space. So we are very optimistic about Champion. So we are holding on, but if we get a good opportunity, a good project, then we'll definitely look at monetizing that and using it for.
Right. Okay. Makes sense. So there's And then and how much cash as of last quarter are you sitting on?
Our cash would be around 1.5 million as of end
Okay.
of last quarter, roughly. Yeah.
Okay, understood, understood. Okay, fine. And let's get on to these kind of the exploration component here. You're sitting on, well, I think you describe it as a diverse portfolio, and I think you're not wrong here. So maybe could you kind of break it down in terms of the commodities and the projects, and I guess prioritize them if you could.
Yeah. So I think before we go to the exploration projects, one of the other interesting things, Matthew, which I would like to draw attention to your viewers is we have got a very interesting position in the Ring of Fire, which is one of the most prospective regions in unexplored regions in North America for critical and strategic minerals. We got a $34.5 million secured convertible promissory note with a company called KWG, or Canada Chrome Corporation, and which has mineral deposits right in the middle of the Noront ground, the erstwhile Noront ground, which Wyloo Andrew Forrest company acquired for more than $600 million in 2022. So this note earns us a 6% interest, so which is kind of issued by way of shares to Fancamp. So we have a healthy position of about 10% in KWG. And in addition to that, this note comes due in September 2026, and we hope KWG is able to repay us. If not, then we are in a good position to be involved in the whole landscape of Ring of Fire, and with the whole geopolitical challenges and all we are hearing with some of the very interesting companies putting in a lot of money there. This is one of the shining jewels of Fancamp, really.
So explain how that came about, please.
So we were in a 50-50 joint venture for
Yeah.
a deposit called Black Horse. And with that deposit, we finally decided to monetize it by issuing the secured note and allowing KWG to kind of develop and implement its own plans. And if they succeeded, then we get paid out, and 35 million is a handsome amount of money. And if not, then we have protected our interest by virtue of this note. And we are getting shares worth $2 million every year since we did this in 2022. And given the interest in the Ring of Fire and the strategic position of some of the mineral properties of KWG, we are very excited about this.
Okay. Well, let's get on the other exploration projects in the portfolio, please.
Yeah, the other one, just to kind of
There's more.
complete the story on KWG, is that we have a 2% NSR, which again, I think is extremely valuable and will give us good results going forward.
Okay.
So I think that's one. I talked already about our interest in Champion Iron, both in terms of royalty and in terms of shareholding. This is the second one. The next one, which I would like to mention, is that Fancamp holds 96% stake in Magpie Mines, which has got a Magpie deposit. It's a titanium deposit. And again, it's located in a very interesting region where Rio Tinto's Lacteo mine is, and it's one of the world's largest undeveloped hard rock titanium deposits as per US Geological Survey data. So it's again an asset which is quiet now, but again, the way we are seeing the whole landscape evolving, the interest in critical minerals and the importance, Magpie is another property which Fancamp hopes to monetize. And near that property, we have another one called Mingen, where we have done a bit of work this year, again, titanium property in a very, very attractive area. So that's the other one which I wanted to draw attention of your viewers, Matthew.
Right. Okay. So how do you advance all of these? You're sitting on, let's say, 1.5 million cash. You've got a bunch of securities which you can liquidate at, I guess, if the market allows, or at your election. You don't need permission to do that. I imagine. So, how do you finance whatever you're attempting to do in 2025?
So I think the major focus of financing is on the next one, which I wanted to talk about. We took a large land position in New Brunswick, which is a highly prospective and emerging region for copper gold projects. And once we acquired a large land position called Riley Brook, we then went ahead and did a partnership with Lode Gold Resources, where we combined their mineral property, which is called McIntyre Brook, which is just next to the Puma ground. And your viewers must have heard about the recent deal between Kinross and Puma, where Kinross is going to spend $15 to $20 million over the next few years in developing that camp. So we did that partnership. We have a clear exploration plan. We invested $2.5 million in the Lode Gold subsidiary, and we are going ahead with the exploration activity. We have done a lot of field work, and we also have done certain other geological surveys, and the team is confident of getting some very positive results. So this is where our exploration dollars are going right now in the New Brunswick joint venture. And we already raised $4 million in the beginning of 2024. So we are well positioned, and we also have our marketable securities. So depending on the results, depending on how the progress is, where our stock prices, will decide what is the best way to finance our mineral projects. So really speaking, unlike many of the other juniors, financing the projects has not been a problem for us, given the backers we have and also our strong balance sheet. But we continue to allocate capital very carefully and focusing on a few initiatives, and then seeing how we can monetize the instruments and the assets which the company already has.
Right. I guess what I'm trying to work out here is, if I look at what are you like you said, was you, I don't know, 17, 18 million market cap, but you having the right partners and having the stock in the right companies that you can monetize is important, because like KWG, they're, what are they, 24, 25 million market cap company. So you dumping their stock in the market probably won't do them any favors, and it probably won't do you any favors either. So are you more likely to be issuing more shares and raising capital that way going forward? And if so, as you say, you've got to be very careful and very efficient with what you choose to spend your money on. So, what type of activities specifically should we expect to see from you this year, and why do you think that's the best thing to do in terms of best allocation of capital?
Yeah, so I think, as I mentioned, that the key focus is our New Brunswick joint venture in terms of allocation of capital. And the other initiatives, we also have, we have some other properties in Quebec. One is called Grasset, the other one is Delio, and another one is Clinton. So there's some work where we are spending the flow through dollars and looking at getting some good results out there.
Yeah.
But in terms of moving forward, I think again we are very confident about where this New Brunswick joint venture will go. And once we have the results of the initial exploration work, we will potentially look at putting in more money there. That's our plan. I'm not looking at kind of raising capital at this point of time. We still are okay for the next little while, and we'll see how it goes. We have options for either selling some of our securities, as you mentioned, not the ones which like the one with KWG, but which have got a larger float and which are easy to kind of dispose of. We can look at those. Or if we get momentum and traction on our stock price, we could raise some money as well for a meaningful venture.
How do you assess risk? Okay, so I get, like, gold's very fashionable in the sense that it's gone from 2,000 at the beginning of 2024 and the end of the year at 2,650, having hit 2,700 all-time highs. Right, it's all good, but not necessarily for exploration companies. And you may look at the New Brunswick area it's got some big names in there, in the sense that you
Correct.
got. But they're not necessarily getting all of the love and attention. The First Minings and the Newfound Golds and etc. aren't getting the kind of stock response that they would want for all the work and the money that they're spending there. I think maybe the only exception possibly is Calibre. So again, the risk assessment for you is like, we'll spend as much money as we need to until we see the market is rewarding that type of specific type of activity with gold explorers. Is that the attitude?
Yeah, our attitude is slightly different, Matthew. I mean, of course, what you said makes sense, absolutely, and one has to always look at that way. The team, if you see, and maybe in one of the other conversations, I can, talk more about them. Right from the investors to the team are looking at creating fundamental value. They are not worried what's happening to the market today or tomorrow, but trying to build several drivers for value creation for the company. And that's why you will see that we are pretty low on, kind of going out there and drumbeating the stock and things like that, which we want to improve on for sure. But we look at where can the long-term value be created. So can it be created in what we have done on KWG? Can it be created in this very interesting structure in New Brunswick, which we have come up with? Can it be created in another investment which we made in kind of a Neoterex Minerals, which is rare earth element company? So we look at it that way. We are, as I said, prudent. So it's not as if, one particular initiative takes us over the top, or it's an over the top initiative. It's a step-by-step gate review kind of process. So risk management is inherent, and probably we have the luxury of a very strong and sound, balance sheet, which allows us to do that and not worry about, day-to-day changes in the market. We believe that gold and gold-rich base metal projects will always be there. So our focus is on trying to create as many opportunities as we can where we can participate in the right jurisdiction and the right kind of properties, right kind of partners, as you had highlighted earlier.
Well, that's refreshing to hear. Fundamentals driven versus knee-jerk reaction. Rajesh, look, I think as a first introduction to the business, I appreciate you making the time to come on the platform and choose your story. We'd love to see you again. So do stay in touch as things advance for you, this year. Thank you very much.
Thanks, Matthew. Your questions were very insightful. Thank you very much. Bye-bye.